This report brought to you by the Richmond Club, where investors and high-growth companies meet.
I'm Greg Beckett, host of the Richmond Report. I recently added a Texas oil and gas company by the name of Lonestar Resources to the Richmond Club Index. Over the past 3 years, the company's grown its resources by over 50% per year. Yet despite this phenomenal growth, the company's stock is trading at less than half of its book value. I sat down with the company's CEO, Frank Bracken, to learn more. Frank, welcome to the program.
Thanks very much.
So tell us a little bit about your company, but first I want to hear a little bit about your background. When you graduated from Yale, you got a great job with Peter Lynch.
Correct.
So how did that happen?
Pure luck. I was one of 5 people chosen for their analyst class that year. It was 1986. Oil was $6, and walked into my office and said, "You're from Texas. You're doing oil and gas." So I was typecast. Really an amazing experience for me, and really in 2 regards. First, to be able to be mentored by someone who can tear a company apart, understand their earnings power, understand what makes them tick in minutes was just an amazing experience for me, and really gave me a lot of analytical tools. But secondly, at the time, Fidelity was the largest money manager in the world, and having access at the age of 23 to CEOs of Exxon and Chevron and places like that, and being able to see how they operated their companies is something that I try to carry with me every day. I try to remember really what made those companies successful, what made companies fail, and use those learnings in what I do every day at Lonestar.
And then you moved to become the managing director of what company?
Well, I've done several things. I was actually an investment banker for quite a while,
yeah.
Mostly at Jefferies, focusing on the energy space. Did billions of dollars of public equity offerings, debt offerings, acquisition and divestiture assignments. So a lot of the tools that I've put in my kit came from those experiences.
And you were also with Getty Oil?
With Garrity Oil, yeah. I was a CFO of Garrity Oil.
Yeah.
We grew that, and that's a DJ Basin operator in Colorado. We grew that company from about 1,000 barrels to about 15,000 barrels a day in about 3 years.
So you've raised over $5 billion for oil and gas companies. You've seen everything. What made you pick this property and this company that you're with now?
Well, I mean, it really has all the ingredients for a company like ours to be successful. First and foremost, it's about making money, and the Eagle Ford Shale is very close to all of the refineries and export markets. It's got, so we get premium prices to West Texas Intermediate. So we get the best prices in North America. We have unfettered access to transportation. A lot of the other basins in North America have a lot of trouble getting their product to market. We've got spare capacity in all our pipelines. So the business of getting your product delivered to the buyer at a great price is a easy box to check with us. The bigger issues, the things that I saw as real opportunities, and they've only accelerated through the downturn, is that there were lots of this was a play that was discovered in the boom. It was discovered in a $100 oil environment, and I think the industry got really sloppy in terms of being technically focused. And focusing on the things that really drive recoveries and returns, because the fact of the matter was, at $100 oil, anybody could make money in the Eagle Ford. Prices down here, that's not the case. And so what's happened is a lot of our competitors have gone bankrupt. They've moved on to other basins. And whereas there were probably 8 or 9 public companies that actively compete with us in the Eagle Ford,
this has been This has been a good opportunity for you to be able to, where they can't make money, you and your team, because of your background, you've been able to put together a team, move in, and make money where these people have walked away. So you pick up the properties.
That's exactly right. I mean, there's the industry's underfunded. The equity markets are difficult to raise money in right now, and we're in an environment where most of our competitors' focus is elsewhere. And that's been a huge advantage to us. I think the single biggest differentiator for us over the last 5 years is we've developed a technical expertise that I think is unmatched in the play.
Well, I mean, it seems to be because you've been growing your resources. Over the last 3 years, you've been growing the resources by more than 50% a year. And that's phenomenal growth, but why is the stock trading at half of its book value?
Well, I think by and large, we're the baby that's getting thrown out with the bathwater. The energy as a percentage of the S&P has fallen from over 12% to 6%. So there's just a general lack of interest in the oil and gas sector right now. And I think that smaller companies get particularly hard hit when those circumstances arise. And it's, having looked at the industry.
Yeah, so it's the cycle is down and you're a junior. And
it's happened
I get it.
7 times in my 33 years of being in the business.
But I guess it's a matter of riding the cycle.
That's well, look, we can control our own destiny to some extent. We're projecting 25% compounded growth through 2020. That in and of itself, I think will solve part of the problem.
Well, getting out and telling your story is important too.
It is important.
You haven't done a whole lot of that in the past 3 years. So.
We haven't. We've been focused on the business.
Yeah.
The business is starting to run really well, and the opportunities are multiplying.
So to summarize, why should investors consider buying the stock at this time?
Well, I think just simply the stock as an instrument from a valuation perspective, it's unbelievably cheap. The stock's trading at about half of its proved net asset value. That caused me to go buy some stock last week in the open market. So I'm putting my money where my mouth is. But I think you're betting on a company at a really cheap valuation it's a maverick in a way. We're real contrarians. We're focusing and growing our technical efforts in an area that a lot of other companies are abandoning. So the opportunity set is really ripe for us right now.
Good job. Keep up the good work. Thanks for joining us.
Thanks very much.
For more information about the company, go to lonestarresources.com. If you'd like to see more videos about undervalued high-growth companies, please click the subscribe button below.
If you enjoyed this video, please let us know. You've been watching the Richmond Club Report. If you've just come across this channel, please feel free to like and subscribe. I'm sure you'll find a lot of interesting and lucrative investment and trading ideas around here. We'll see you again soon on the next video. Cheers, guys. Have an amazing and profitable day.